Hey guys, welcome back to the channel. I hope everyone is doing well, or at least better than I am. So sorry if I sound really annoyed because I'm having problems with like this old machine. So hopefully this recording goes out okay and the sound quality and all that kind of stuff is okay. So NEOS filed for a like their version of like the IWM, like a high yield covered call ETF. So I'm hoping it comes out sooner rather than later. So I think this is a good entrant into like the high yield wars of 2024. The only thing that could be bad is that NEOS might be a little too late with their IWM ETF. At some point, like BlackRock is gonna be finished with the crypto main course, and I'm kind of wondering what BlackRock will like what they want for dessert afterwards. So this is just my opinion. BlackRock already has like their IWM ETF out, like the IWMW. So whatever NEOS puts out, I don't know. I think people at some point they're gonna probably uh, gravitate towards BlackRock just as like kind of like a safe haven. Some of like these newer guys like NEOS, Defiance, etc. Uh, I guess like when the bad time comes, like people are gonna want safety. So I think ultimately BlackRock will win out, but like there's still some time for like these new guys to kind of improve. So just like over here on the left hand side, like this is like the SPY eye. So as you can see, like since their inception, they've grown like pretty well. Like they have like over a billion in net assets. So BlackRock is probably looking at this and like, this looks kind of juicy. So I guess at some point, like BlackRock, like they'll maybe fire up like their marketing or like their financial muscle and use it to good effect. Because right now, like over here, the IWMW on the right hand side, so far, I mean, it's still pretty new. So they only have about almost 16 million, which is a far cry from what Spy Eye has accumulated. And I know it's not a fair comparison because Spy Eye came out first, and they had a like a long lead time. But guys like the newer guys, they have to either they have to offer like a higher yield, or they have to be like more consistent, like payout, just to kind of compete with the big guys. Because I guess like Spy Eye is one of the better ones in terms of keeping like their expense ratio like reasonable. And some of like these other guys, like at 1%, expense ratios, in a bad market, money is gonna flee, eventually. In BlackRock, like they have like their reputation that they want to uphold, and they still want to be a king. So that's just my spin on it. And of course, like just back to NEOS real quick. I'm guessing that their ticker symbol is going to be IWI just to kind of like stay consistent with their theme. So I'm thinking like since they filed this April 8th, so I'm guessing at the earliest it'll probably be out sometime in the summer. Again, hopefully sooner rather than later, like for their sake. So they're gonna call this the Russell 2000, like the high income ETF. They also have not released like their expense ratio, but again, just to be consistent, I'm guessing they'll probably, you know, first like there'll be like monthly distributions, and then also 68 basis points as well, just to kind of line up with their brothers and sisters in SPY I and Triple QI. And in terms of distribution yield, since like the RVX usually is higher than the VXN, so I'm guessing it'll probably be like 15, 16% uh, optimistically. But again, that's just my guess. Uh, the methodology, the Russell 2000, it'll be similar in that they'll use like the Russell 2000 stocks, either with the ETF or stocks, and they'll use like a RUT covered call or call spreads. So similar to SPY I and Triple QI. And the irony here is, I think why I keep saying like these little, not little, but I mean, NEOS has done a pretty admirable job in terms of asset gathering. Is that if they do wind up using like the IWM, they wind up actually paying BlackRock as well. So it's kind of funny. But anyway, that's just my take on it. Uh, and like the portfolio managers stays the same, so that's good. It's good to see some consistency, and I'm glad like they're coming out because I think it's good for IWMY And I was kind of expecting IWMT to already be out, but I guess I guess maybe there's like some issues, or maybe like they want to get the timing right. But I don't know. Like I feel like the fines they've been kind of getting kind of sloppy. Like the past few days, um, I noticed for Trust and Spy T, there's like a 2 day lag in terms of like updating like the nav and like the pricing, and they only have triple QYs and like JEP Y and IWM MY Trust and Spy T so far. So, and I know they have like non-option based ETFs, but YieldMax has more, and they're doing a better job in terms of like updating the website. And like sometimes even after the close, or even like after 5 p.m., like this stuff isn't updated, and that's kind of annoying. But anyway, that's just my spiel. So like over the weekend when I do like my like the dashboard and like the mini like the spreadsheet weekly summary, please forgive me if there's like some if the data looks a little bit funky, because I had to make adjustments just to counter like the lag. So I'll do my best to kind of update everything as soon as they get it out. But you know, I feel it's kind of unprofessional, especially with like the high expense ratio. But you know, that's just my take. So I think it's still a good time to be live. I'm really thankful that there's more competition coming out, because I don't want any one like company get sloppy and like take us for granted, because like we work hard for our money, and I think we deserve to be treated fairly. So my guess is that like even though like Neos might not be able to outperform on in terms of distribution yield, they probably have like a more stable, I guess, like net asset value. They've done a pretty good job in terms of that. So this could be good for like some folks, people that can prefer consistency rather than just like up and down yields. But of course, like you should also consider having other income-based investments, dividend aristocrats, treasuries, what have you. And of course, like there's like the usual risk, like we don't have any control over the option strikes selection and implied volatility. Even though like the past few days, there's been like these nice little spikes up, but they don't last very long. And definitely like the share prices can get cheaper. Of course, as I mentioned, yields won't be consistent month to month. Although NEOS has done a better job than most. Actually, and you might be able to borrow against them yet, so you still have to keep checking up with your broker whether you can use them as margin or collateral for other things. So just keep updated. Thank you for watching. I hope everyone, if you like this video, please consider giving this a like. Subscriptions are definitely welcome. I just want to stay alive at this point. I mean the for the channel. Super thanks are greatly appreciated, and I'll try to get to all reasonable requests and topics as soon as I can. So again, thank you, and I'll see you in the next one. Bye now.